friends. Rafi here from the Endgame Investor. And boy, what a week it's been. Gold, as I speak, is at new all-time highs of $2,635 an ounce. Silver has recovered all of its losses post 50 basis point rate cut when Mr. Slammy came and tried to slam it down, but failed in both gold and silver. We'll be discussing that. Chinese stocks are at long-term support, and the trend line that has been established in the Chinese stock market since 2006 has reversed from support to now resistance. So Chinese asset prices are in big trouble. Another wave of food price inflation in China has begun. The platinum to silver ratio is approaching a new all-time low, excluding the 1980 silver top. So if you would like to exchange some silver to platinum, you still have a great opportunity to do so. And despite gold being at all-time highs and silver climbing fast, we still have the final monetary crunch ahead of us, which could very briefly bring down the prices of everything, including gold and silver. Gold the least, but silver more. It won't last long, but it is still ahead.
In today's news recap, silver price soars above $31 after Fed's bumper rate cut decision. Silver delivers a sharp rally above the crucial resistance of $31. The white metal strengthens as the U.S. dollar surrenders its early gains and declines. The U.S. dollar weakens as the dust settles after the Federal Reserve's monetary policy decision, in which the central bank announced its first ever interest rate cut in more than 4 years. Historically, lower interest rates by the Fed bode well for non-yielding assets, such as silver, as they reduce the opportunity cost of holding an investment in them. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, falls following the Fed 50 basis points interest rate cut. The Fed was widely anticipated to cut interest rates, but traders were divided over potential rate cut size. A bumper interest rate cut by the Fed gives a clear indication that price pressures are on track to return to the bank's target of 2%. For the interest rate guidance, policymakers see the federal fund rate heading to 4.4% by year end, which suggests that there will be at least more decline in interest rates. On the contrary, the CME FedWatch tool shows that the central bank will cut 75 basis points in the remaining monetary policies this year. Silver price strengthens as it has delivered a breakout of the downward sloping trend line plotted from May 20th high of $32.50. The asset is expected to extend its upside towards the previous high. Upward sloping 20-day exponential moving average also suggests that the near-term outlook is upbeat. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, turn on notifications, and check our description for full vid credits. Enjoy the episode.
Bitcoin trying to regain 50-week moving average versus gold very quickly on the Bitcoin chart. Yes, Bitcoin has been going up lately over the past 2 weeks to be exact, but it's still struggling at the 50-week moving average here relative to gold. The 50-week moving average is at 24.26, and Bitcoin is slightly down from this chart. This chart is a little bit delayed, so it says 24.49 here. Basically, Bitcoin is challenging, trying to break back through the 50-week moving average. I don't think it will be able to do it, but we'll see. Bitcoin is Bitcoin. It's very unpredictable. Chinese stocks at major support. This is what I said in the introduction. The major support line is at about 2,700. As you can see here, it's been hit 5 times, once in 2016, once in 2019, twice in 2020, you could call it 7 times, and twice in 2024. Once you have this many hits on support, it usually breaks through. But let's look at what is going on in the longer term in Chinese stocks. This is a lot scarier if you're invested in Chinese stocks. We have this same support line, the short-term support line, this horizontal line over here. You can see 1, 2, 3, 4 on the short term, 5 going back to 2016 or 6 or 7, depending on how you want to count it. But we have a longer-term uptrend line from before the great financial crisis of 2008, which really drove Chinese stocks a little bit mad, or a lot bit mad, from 2005 until now. Or until, to be precise, somewhere before 2024, is that 2023, 2022, somewhere in there, there was an uptrend, right? And it hit once here, once in 2014, once in 2018, once in 2020, and it broke through finally somewhere in 2022, and now it is resistance. You can see here that we challenged this uptrend line last year, and now we are testing the final support zone over here. So if we break this, the uptrend line that has been in place since 2005 is now broken. Chinese stocks are in trouble, and China being the second largest Keynesian economy in that sense, if it goes through a deflationary spiral, the rest of the world will follow, and then there will be the final round of money printing. All this stuff is going to happen at the same time in unison, and we will have our end game. Another wave of food price inflation in China, meanwhile, while the Chinese asset prices are falling in a potential deflationary spiral, what we have here is a new upsurge in Chinese food price inflation, basic necessities. You can see the reason I put it back to the 1990s here is to show you that surges in Chinese food prices tend to be long-term, right? Once you are out of a deflationary epoch here, or time frame, time period, whatever you want to call it, usually food price inflation increases for the long term. So here we have, it's at 3.2% or something like that right now. This is the beginning of a new surge in basic necessities, increases in food prices in China, while the asset prices are falling. It's stagflation is what it is. And that is a very big problem for the Keynesian world that we live in, but a good thing for us stackers. Platinum to silver ratio, approaching end of a 26-year triangle, okay? You have the opportunity, if you would like to exchange some silver for some platinum. I myself only have 1 ounce of platinum. I exchanged it for about 34 ounces of silver. I spoke about that story a few silver reports ago, a few months ago. If you would like to have some platinum and you have a little bit too much silver to carry or to handle, you can exchange about 31 ounces for it for a nice ounce of platinum. And I don't think you're going to get much better prices than this ever. We have a descending triangle that is going to break out to the upside at some point soon. It is on its convergence point over here. It started since 1998. So this could be one of your last chances to exchange some silver for some platinum if you're interested in platinum. Silver is a money, platinum is a less good money, it's less liquid, but it's at such a good price that I would be tempted to exchange more silver for platinum if the opportunity arises, and I can find a coin shop that can supply it here.
In today's news recap, can Fed rate cut expectations sustain silver's uptrend? Silver prices rose, buoyed by growing expectations that the Federal Reserve may initiate interest rate cuts as early as next month. This optimism, coupled with ongoing geopolitical tensions in the Middle East, helped lift silver despite a stronger U.S. dollar. Investors also remained focused on a slew of U.S. economic data set for release this week. Silver's upward movement on Thursday was primarily driven by weaker U.S. Treasury yields and increasing speculation that the Federal Reserve will cut interest rates soon. In addition to Fed rate cut speculation, traders are closely watching several key U.S. economic data releases, initial jobless claims, and second quarter gross domestic product figures, followed by pending home sales data later in the day. These indicators will be scrutinized for further clues on the state of the U.S. economy and the likelihood of the Fed easing monetary policy. However, concerns over weak Chinese demand for silver continue to linger in the background. China is a significant consumer of silver, particularly in industrial applications. Sluggish demand from China could potentially weigh on silver prices in the long term, even as investors focus on U.S. economic data and Fed policy. The recent softness in Chinese economic data has raised concerns about the sustainability of silver's current price levels. The release of the PCE price index on Friday is particularly critical, although analysts doubt it will significantly alter market expectations for the Fed's policy direction unless it deviates substantially from forecasts. It remains a crucial data point for traders. Looking ahead, silver appears resilient, especially in a low interest rate environment where it becomes more attractive as a non-yielding asset. However, the metal could face short-term pressure if upcoming economic data dampens expectations for a rate cut. Additionally, persistent concerns over weak demand from China may cap gains in the longer term, especially if the Chinese economy continues to struggle. Despite the dollar's recent gains, which typically weigh on silver, the prospect of lower U.S. interest rates has kept investor sentiment positive. Now we'll show you the best clips of the latest interview, but first, subscribe, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Mr. Slammy fails completely. Gold edition. This is about the attempt to slam the price of gold and silver yesterday. You can see here that this over here, post the FOMC meeting and Powell's press conference. So gold went way up to an all-time high, just about 2,600 in London prices. And then Mr. Slammy came and slammed it down to below 25.50, I think about $53. And then Mr. Market responded and we're back up to an all-time high. Now, we're going to go into silver edition of the same thing. You can see here the 50 basis point cut over here rose silver to a high of somewhere around $31.30. Then Mr. Slammy came in and eventually failed after a few hours, and we're back at the highs here in silver. So the question is, was this an attempt to slam down, or was it something else? And the open interest can answer that question for us, because we can see here that the open interest is at 545,000, right? It hasn't gone down from these numbers over here. This one says 538. The current number is 545, so open interest went up. Right? That means that more contracts were opened by short sellers, and those contracts were met by longs at higher prices. So the opening up of more short contracts, for every short there is a long, obviously, did not bring the price down, only very temporarily, ephemerally for a few hours. And the longs are back in control here. So the slam did not work in gold, and we're not in a short squeeze yet. But the shorts keep opening up new contracts at ever and ever higher highs here, so they are in trouble. To give you a longer perspective here, this box over here is still ahead of us. The open interest in gold, the all-time record was just before the 2020 slam down, and around February of 2020 at 800,000 contracts. We're nowhere near that now. But what I'm saying is that before a financial crisis, usually you have an incredible rise in open interest in gold. I don't know why that is. I don't understand the mechanics of it. I'm just saying it happened here. And then you had a huge slam down to 1450. It scared the pants off of a lot of stackers. It doesn't look very big on this chart, but it was very big at the time. So if we start to see open interest really climb high, like towards 700,000, 800,000 contracts, that could be a signal that the final slam is ahead of us. Just be careful of it. It might not happen. Just be emotionally prepared if it does. This is also still ahead of us. This little peak in open interest here in silver was also an all-time peak going back to 1980. 1980 was higher, but this was the peak excluding the 1980 silver parabola, and it brought silver down to somewhere in the $11 range, freaked everybody out. So if we see silver open interest climb to about 240,000, it's right now at about 140,000. We're nowhere near there yet, so we're in a different situation. Just be careful of this and be advised that it could happen, and be emotionally prepared. Now, the final thing I want to go into is the war on cash. Right, this article I just saw, I will translate it as I read it. This is in Hebrew. It's about the 200 shekel bill as a war is going on between Israel and Lebanon and Syria and Iran proxies and possibly Egypt. Who knows what's going on down there? I don't know. This article came out, and the war is cover for this, and it's very obvious to those who understand. It says here the title, "The End of the 200 Shekel Bill. The Prime Minister Netanyahu has advised the Treasury Secretary or the Treasury Minister to."
What do you think of Rafi's analysis? Is he spot on, and do you agree with him? Post in the comments section your honest opinion and share your price prediction for silver going into year's end. Share this video with a gold bug and watch this video right here because it's a perfect fit for you. I'll see you on the other side.